everybody, I'm Matt Smith, the Director of Operations at Secure Insurance Group, along with Monty McCurley. Monty's the Director of Annuities and Securities here at the office. Monty does a great job. Monty does a lot of things. And so the biggest things that Monty does is help our agents learn. We've got a lot of agents that maybe have never sold an annuity, don't know what an annuity is. They get scared. A lot of agents get scared at annuities and they think, oh my gosh, it's a lot of money, I don't want to mess it up. And one thing that Monty does is he makes sure our agents are trained, well prepared, have the illustrations they need. Because a lot of times our agents are in the field and they may not be focused every single second of every day on, the best annuity products on the market. And Monty is, and if Monty doesn't have that information, he's got contacts in the industry that he can go to really help make sure that you're making informed decisions and your clients are doing a good job. So this is Monty McCurley. Today, Monty's going to talk to us, and we're going to talk to you today about the foundation of annuities. So what is an annuity? What are the main types of annuities? I think there's even some subtypes to annuities. And so Monty's going to talk to us today about all that. So Monty, I'll let you take it away, buddy.
Hey, good to be here, Matt. First thing I want you guys to know is we're starting these videos. We're trying to take from the very beginning annuities agent all the way to someone that's very experienced. So we're going to start out with just the basic annuity definitions and types of annuities and things like that. And then as time goes, we're going to get a little more complex. Main thing we just want to do is from beginning to end, we just want to cover every single thing that there is about an annuity. From index strategies to the different types of annuities. As Matt mentioned, there's two main types of annuities, but then within the two main types of annuities, there's subcategories. We're going to get into that today. When to use certain types of annuities. What our goal is, like I said, is to just make sure that we cover everything and give you the best information that we possibly can. And without, think of this like a house. Without a foundation, you're not going to be able to build anything. Right?
Perfect.
So just to kind of jump right into the two different types of annuities. The first thing we're going to talk about is the immediate annuity. And that's an annuity where you start taking income right away. Okay. You make your deposit, your lump sum deposit into your annuity, and you expect to take income within the next few months. Okay? You can set your income up to take it monthly, quarterly, annually, whatever fits your situation best.
So can I choose when I want to start the income? So if I want to start it like 30 days from now, or if I want to start it 5 years from now, I kind of get to set.
Absolutely, but with an immediate, it's going to be honestly within the next few months. If you're pushing it down the road, that's going to be what we jump into next, the deferred annuity. So with a deferred annuity, you're just deferring taking your income for a certain time period, 3 years, 5 years, 7 years, 10 years, whatever fits your time frame and your horizon for your retirement. How do you find annuities? How do we fund annuities? There's basically two ways that we're funding annuities. We can take a single premium. A lot of times that's going to be a 401k rollover, a 403b rollover. Taking your money from your retirement account where you're at work, rolling that into one of our annuities. That's going to be the single premium. It's going to be just like I said, one lump sum, and it's going to be just you're done after that. The next thing we have is the flexible premium annuity, okay? And the way that works is you can still take that large lump sum and dump in there from a CD or whatever, but then you can also add money to it monthly, quarterly, annually, just like that. So a lot of times we have some younger clients that are looking to build their retirement over time. Maybe they're in their mid-40s and they still need some more accumulation. So what we're going to do is take that lump sum, lump sum, and then make some planned deposits as time goes by, just to help build their retirement, get it up to where they need it to be.
Awesome.
Yeah. So after we talked about the two types of annuities, the indexed and the deferred, then we got to jump into the different subcategories of annuities. And basically there's four types. You have the fixed annuity. We're going to go into each one of these in very much detail in following videos. We're going to talk about the fixed annuity. When's the best time to use that annuity? Why should you not use that annuity in certain situations? We're just kind of hitting the highlights here. But the first one is the fixed annuity, and that just has a very specific purpose, okay? A lot of times it's going to be your older client. This is also referred to as a MIGA, a multi-year guarantee annuity. But like I said, it's got a very fixed, very specific purpose. A lot of times your older client, They don't want any chance of any loss, no fees within their annuities. They're just looking to get some pure gain out of it.
It's typically a lot lower of a percentage. It's typically 2 or 3%, or maybe even 1% if I'm not mistaken.
Correctly, and you've heard this one called the CD annuity. There's no such thing as a CD annuity. It's a fixed annuity, but a lot of agents try to give it fancy names to get away from the word annuity.
And so I would want this if I'm the kind of a person, if I'm not wrong, I'm the kind of a person that would want, down to the penny, exactly, no variance, no, down to the penny, what my money's going to be worth in 3 years and 5 years and 10 years or whatever. Yeah. Down to the penny, exactly what's going to happen. Doesn't matter if we have another COVID year, doesn't matter who the president is, doesn't matter what's going on. It's just, this is a contract. I put this much money in, it's fixed at 1.5%, and then every year it compounds, and this is how much money I have.
Yeah, that's exactly right. There's some good ones out there right now getting 3.5%, maybe 4% at certain places. But if you put $100,000 into this annuity, after 1 year there's going to be $104,000 in there. At the end of 2 years, there's going to be a little bit more than that. So you're getting that 4% guarantee every year for the life of the contract. The next thing we talk about is just our immediate annuities, and that we've kind of touched that subject a little bit so far. The main thing to know about those is those are for people that are looking to take their money, roll it into an annuity, and start getting lifetime guaranteed income. That's the beauty of the annuity is you can never outlive your income. You live to be 120 years old, you're getting that every month.
Probably stupid question, but I would assume that there's different carriers that fit better in these different niches.
Absolutely, yeah.
And so if I'm a Medicare agent or a life agent that doesn't do a lot of annuities, that's something that I can call you and say, hey, I got a client, they've got this much money, this is kind of what we're looking to do. And you can basically take that and form a case, formulate an illustration and all that stuff, and help me present that.
Yeah, absolutely, and that's my main job.
So I may not need to, but I may not know all the different subtypes and know all that, but that's something that you're able to say, well, we need to put the money here, we need to do this.
That's correct, and like I said, that's one of my main jobs here is to help our agents out, and there's no way you're going to be able to sell Medicare, sell annuities, sell life, and everything, and know everything there is to know about each subject. We're going to be your subject matter expert. If you're in your Medicare appointment and you identify a customer with $100,000 in a CD and they're not happy with it, call me. We'll get on the phone together. We'll exchange some information about your client. I'll come back with a couple of different annuity solutions for you to look at. I can give you the applications. I'm going to go over the applications before we send them in. We want to help you every step of the way. And
what you're saying is you're the man.
Well, I'm not saying that, but
he's the man.
I'm the man. So, yeah. The third one we're looking at is a variable annuity. To sell the variable annuity, you do have to be securities licensed. I am securities licensed, but I still don't do a whole lot of variable annuities.
I'm not wrong, there's a lot of fees in those.
There's a lot of fees. You're also actually in the market. You're not in an index. So you can have the possibility, your client can have the possibility of losing some of their principal. Now there's variable annuities that are set up where you're not going to do that. There's guarantees, but they're also capping what you can gain. So if you're going to do that, why not get something that we all like much better, the fixed index annuity?
Well, if I'm going into an annuity, it's because I want to be very conservative and not lose money. So right. I totally agree.
Yeah, and I think that's I just bring these up to let you know the different types. That's something that we hardly ever use here. If we're going into the annuities, like Matt said, we're trying to get our clients into something that's safe, gives them the upside of the market gains, and we're going to protect them from the downside of the market losses.
Awesome.
And the last one we're going to talk about here in our subcategories is the fixed indexed annuity, and that's something that over the last several years they've just made a lot of changes. These annuities are amazing with some of the returns we're getting on them. We've got certain companies we're getting as much as 11% returns, which is unheard of in annuity, which is great. But when all this, everything turns around and the market starts going down, the beauty is these guys are protected. They're not going to lose a penny of their money, their principal that they started with. Years ago, they used to have what they call an equity indexed annuity. There may be a few of those still around, but they don't offer those anymore. So the 4 types of annuities you're looking at is going to be the fixed annuity with a very specific purpose, the immediate annuity, which is, you know, you're going to take immediate income within the next 2 to 3 months at the most. Your variable annuities, which we have the capability, but we just don't use that one a lot. And then the fixed indexed annuity, which is one of our favorites right now. But just make sure and know that we're always going to make sure that we're putting your clients, your customers, in what's best for them. We don't sell anything here. We find solutions to their problems, and we let them make the decision, but we help them to make an informed decision.
Awesome. Well, I think one other point is a lot of agents get worried, right? And a lot of agents think like, oh, what if I make the wrong decision or whatever? There's really not a bad annuity out there from what I've heard you say. Maybe avoid variable annuities,
right?
With the exception of that, there's really not a bad annuity. And so there's really no need to be scared. Just ask the questions, and we'll get into that in future videos, but ask the questions that you need to uncover those things,
right.
And you can give them those questions. Ask the questions, find the money, come to Monty. Monty will help get you a case illustration and get it sold, help you with illustration as well as questions and follow-up stuff, and really take it to the next level. So thanks for watching. Be sure to tune in for future videos to learn more about annuities.
Thank you, guys.